9:54 a.m., 11/3/2013. It's football Sunday, but more importantly, I have an Apple chart in front of me with the weekly support level at the 100-week moving simple average. They reported earnings last week. As far as I'm concerned, the quarter was outstanding. Not only that, they were kicking on all metrics. However, we continue to sell down in the name. They blew out the quarter. Icon is in the stock. All of the analysts have upgraded the stock. The broader part of Wall Street has turned extremely bullish, but the short-term price volatility has been horrendous in Apple. I can say here, starting out the month of November, that the 100-week moving average is holding support level right now. As far as the daily chart, we are below the 10-day simple moving average at 523. Here was the earnings release. We went straight up to 539. After hours, it hit as high as 542. In after hours, when they released that report, they did drop it down to 503. The following day, buyers stepped back in Apple like they couldn't get enough of it to buy, and it ran it right up to 539. Every dip, people are coming in and buying the stock. So what we're saying is that from a daily chart perspective and the price volatility is that the lower support level, remember it was at $503 in after hours way down here when they reported their earnings last week. We have the live video. It's up on the website. Go look at it. And we bought some Apple down there toward the bottoms. So one of the things that we can say that is very favorable is the time of year for them to perform. They have not performed at all. They're underperforming their peer group. They're underperforming the broader indexes. And I can say within the last couple of months that we have left, within the last 2 months here, is that we can come up and break these highs and run higher based on Apple's numbers and what they said on the conference call. Wall Street has put confidence in them, including us. There are times that when something fundamentally meets requirements that we buy them. And so the volatility is extreme, and we're going to continue to buy the dips. The monthly chart is right here. That's a 20-month moving average. We shot right up, came right back down. This was last week. This is a whole month of October, and that's one trading day of November right here, Friday. And that is the wall of resistance at the red line. So when we take a look at the volatility on a 60-minute level, you can see when we got to 539, what date? Wow, how about that? 10/29, earnings release. We went straight up to this number, and I'm showing it, and they brought it straight down here to the area of, let's say, 514.54. From that point on the 60-minute level, we rallied back up here to 527.52. Here and here. And each rally has failed and met, obviously, with sellers with the volatility. We hit the same lows down here, not quite as low as 514 and some change, but 515 area. That's this bottom area right across here. You can see here on a 60-minute. So we're looking for this support level, and we're going to be watching how the name trades. There's a lot of bulls on the name. This is just a 60-minute level here to show you how this stock's volatility has been trading. Most importantly, for some reason, we don't know why, it has totally underperformed the other quarterly reports that have been released. Once again, to conclude this great bull run is that we believe that we're going to be buying dips. Here's a 15-minute chart. Here's the lows from Friday. The weekly chart is that as long as it remains above that 100-week moving average, It's a wall of support, just like when it got above the 10-week moving average here at 493, we kept going higher. If we fell the 100-week moving average, we have no choice but to get short Apple, because if we break that, then sellers are going to step in from a technical level. So as we move forward, starting Monday, tomorrow morning, is that we are going to watch how this price level at 520, that we come out and we get back above. So for this bull run to get really hot, we got to get a closing level above the $530 mark and consolidate the price at those levels to get to the $550 range. The chart on a daily level and weekly level is still very bullish. There was nothing wrong with the earnings reports. Institutions are behind it.